All right, good evening, and today is January 18, 2024, and it's a Thursday. We have a little bit new come out at 8:30 in the morning. It jobs claim, right? So it dropped it less than expected, and let's see how the market reacts to the news. So basically, we are still in week 3 this week of the year 2024. So we are in the third week of trading, right? Thursday, we have one more day to close this week. This week we only have 4 trading days, right? We have Monday is the holiday. And as it's closed today and yesterday, it jumped 0.89, so it's $4.20. That's a huge jump right there. All right, now we go back to the charts, 5-minute charts, right? So we can see the gap up right here. Here's the gap up $1. We have a stack right here, the gap up $1 from the yesterday close, $1.71 gap right here. You see how beautiful the setup is, you see. So we did take a trade today. We re-entry, just one trade, but we re-entry. We'll go to the detail later, but look at the overall, picture or price action or liquidity run, for whatever jargon term that we want to use, but the same idea, right? Let's where we turn up. Okay, show it right. So basically we see that gap up, right? And then it hit, the within the first hour, it didn't move much. You see the range for the first hour very tiny, and then it go up. It reached 0.5 standard deviation. It create a double top pattern right there, and they start going down, and it reached 1 standard deviation from the R model, which is the first hour right there, and that is just short sweep right here. But the interesting that you see that the gap right here, it filled the gap. So it gives us an idea that when a gap up, don't go long right away. Wait until the gap fills. You see that the minute it fills the gap at 13:05, which is 1 p.m. Eastern time, which is a PM section, right? You have a morning from 9 to 1, and then from 1 to 3 o'clock, or which is 15 hour or 14 hour for that matter. You see at a minute it fills that gap and you see a rejection right there, then you know that you're gonna go long. And how you do that? You're gonna put a buy stop right here at the high of this candle, and then the stop loss just below this candle. That's exactly what happened. So basically we reached 30 cents, and we're gonna get at least go to the 1 standard deviation up right there. So we reached 33 cents, and we got $2. So it's about 1 to 6 ratio right there. So that's the beautiful trade that we need to capture, and I think we do have a screenshot of that. Let's see. Yeah, we give the name. The name for this is gap up, fill, and up. So gap up, and it fill the gap, and then it go up. And yesterday is the opposite, right? Yesterday we have gap down, fill, and then down. Right, here's the setup from yesterday. You have a gap down right here, right? You see, for this you don't see much because we don't turn off the pre-market. But if you see we turn off market, we see the gap right there. So wait until fill the gap, then boom. That move is always cast the target gonna be one standard deviation move. That's the commonality we see right here, right? The target gonna be one standard deviation move right there. That's our target, and the target is so you see that the algo try to build the whole buy side liquidity, and when a PM section happen, it go wrap all that buy side. Whoever short right here gonna have switch right there. So in theory, a short sweep move or really a substantial rally. That a question that we're gonna know. Maybe tomorrow we will know. So for yesterday, right? Let's look in the real chart yesterday. So we have the gap down, right? And then refill, not a complete refill, but it's just right there, right? But today it really refill them, but here it not refill all the way yet. And yeah, and the entry, yeah, the signal candle is around here. Let's look at the the reason why we turn on because we use this as a signal candle. So when it go up here, it feel that, right? You see it feel the gap right there. At the fellow gap right there. You see the fellow gap with this one. But for today, it's very interesting for today. Today is actually feel down this gap. Let's turn on the pre-market so we see exactly how it works, right? Because today we have the new come out at the new come out at 8:30, so just right here and right here. But you see that if fill the gap, exactly fill the gap. That's the beauty right there. And it take the sell side already. See that? So we don't see the, oh, I see. That's for signal to short them, right? When you want to short them, then we base on this candle, I guess. We see the double top. We see very common right here. Yep. Yeah, we can do the 4 breakout at this level. But today the signal candle a little bit different, right? To go short, it not so clear like yesterday. Let's turn it off, then we can see. So basically when it reached right here, the 0.5, and it couldn't make harder than that, you see the minute it go up again, we can put a sell stop at this level. That's how we go short. But the best trade is go long when it get filled right here. You see exactly at 1505, it filled the gap right there. And then we put the buy stop at the high. That's the best setup we have. Yeah, but we have another trade right here. We're gonna go long. Right, we're gonna go long with this 4 breakout at this candle. That's what we did with our trade today. And this amazingly swing both, and so the DR model is not working for today. You see the range for the first hour is very in a tight range. So when it's tight range, when it's take the sell side, buy side, then you're gonna take a sell side, and then it swing back again. That gave us some idea when we see the tight range, right? Yeah, about $1. We can put that into our note or journal right there, right? So the condition is that we have a gap up, and it's about $1. $72. Or the ratio will be 0.6 compared to the average gap last 30 days. So basically this is the note that we put right here, right? So we see the markets. Market condition, right? So we have a gap up, and we have the DR is range is narrow, right? It's very narrow. It's about $1. Ish, right? That's the market condition that we observe. So what we're gonna do better next time? So when we see this gap up and we see in the tight range, then it won't go long. When it go to 1.5, we need to get out, right? We need to get out and exit the long, and then we can short from there, and until it's filling this gap, then we can go long again. So that's the idea right there. Okay, now go back to the trade that we're taking today. So let me see. So trade. Okay, now let's see. We want to show the pre-markets. So here's what we have. Okay, so when we, you know, so here's what we have, right? When we saw this, right, we know there's going to be a fall breakdown. We don't know at that, I mean, for sure, right? We just 50%. That's the best we do. You don't need much, 50%, and we managed to reach, right? That's the whole, idea of positive expectancy. No one knows for sure. And we already proved it last year. We just, the win rate 48%, but we still perfect. So that's the whole idea. We don't need to be right. And we need to give up the need to be right, because that will be the roadblock for us. We have to remove it. We don't need to be right. So with that mindset, we mark this level, the low of this candle. At that, when it happened, we said, wow. So it may create a fall break right there. You see, as soon as it creates this doji candle, and this one break this level, it will really fool a lot of, the bear people, right? The bear, called bear trap right there. People will, oh, they're gonna short them because it's break this level. We mark that and we wait. And remember, right here, it switched to this candle too long, so we're not gonna go and get long right away. So I have to wait, see how it behaves. And as soon as it breaks, you see that the reaction, huge candle right there, is the engulfing candle. So give us another signal that we're ready to go long, and let it make another, down close candle, which is it take the buy side and take sell side of this doji candle. Then we saw this open below this level. We put our buy stop in right away, and it gets executed. You see that we got carry out right there. And then okay, and then we got I think we move yeah, I think we move our, after that, this, right, we see the huge up candle, we trail our stop loss, and we got yeah, we got right here. So we trail our stop loss, we put at this candle, and we got hit right there. If we leave our target at this level, which is that's our initial level right there, then we're still in a trade. But that is the lesson learned, the mistake we make today. We go in this, we do the job, we do a better job today than yesterday. Yesterday we kept mixing, we kept FOMO when we entry, but today we more measure, we more patient. That's why we put a note right here. So today we're more patient with our entry, right? We're more patient, but we need improvement. We need improvement on target solution. So we move our stop loss, we get hit, and then as soon as we saw the rejection right here, we re-enter long right away. You see that? We buy the long, that's the green. The rest is the sell with X6. So we re-entry on the candle that kick, to stop it out, we re-entry right away. That's the beauty of re-entry there. And we let it run, We're supposed to get out when it hit right here. That is our mistake in terms of target right there. And next time we need to put the target right here. We cannot let trail stop trail stop loss, or we need to have defined targets. Yeah, when it hit here, we reluctant right there. We get ready with, oh, let it hit to the one standard deviation, but it never get there. You see, we get in big trouble. So we get out of this level, and basically we gain 16 cents, which is half an hour, because we reach 34 cents. So that is our half an hour profit right there. Actually, when it hit here, we get more. I think we get almost 3 hours, and we get ready. It's okay, because we need to build that experience into our system right there. Yes, it's a $1 move right there. We should get out. We should stop right there. Get a little bit greedy. That's our issue we need to learn. So basically we reach 24 cents, and we get 16 cents. So we get count half of R right there. So that is the result of our trade today. So we make mistake. We're so glad that we make mistake, and we learn from our mistake. We try to do better every day, right? Just to improve 1% every day. Then 100 days from now, you will be 100% better. So we have to be humble enough to make a very small but incremental improvement. That's the whole idea right there. We have to humble ourselves. We cannot run if we don't know how to walk. Yes. So right now we are like a baby. We learn how to crawl, and after crawl we can stand up, and then we can walk, and then we can run. It's the same idea, right? You go to the gym and you try to do weightlifting. You saw all the people that lift, I don't know, 100 pounds, 200 pounds, and we don't know their story. They have been there 5 years, 10 years, and how many failures they go through. So we cannot go to the gym on the day one and lift 200 or 300 pounds. That is the psychological battle or aspects of trading that we need to go through. We have to start small, make a very humble improvement, very small, 1%. Some people just 1%, daily increment, and then we get there. So for today, we do a better job at the entry, but we need the improvement on the execution, right? The execution of the trade have 3 parts, right? Entry and exits. So we do better from today and yesterday in terms of the entry, but the exits we have a little bit lesson, a little bit improvement we need to make. So we learn the lesson. Yeah, I think that's enough lesson learned for today. But we see that how beautiful it is. You see, for the right price action, you see you have a gap up, right? Gap up right here. It fills that gap, and then boom, it squeeze all the people short right here. Look at this, from 9:30 to 13. So 9:30, 10:30, 11:30, 12:30. So about 3 hours and a half right there, right? About 3 hours and a half. Yeah, 3.5 is just trap all the buy sell liquidity, and then boom, it goes wrap all of that. So whoever run the SPY algorithm to control the SPY markets, they know exactly what they need to do, right? Because they are the house. It's like you play the game, right? This is the house. When they saw that more people bet on the downside, that means more liquidity on the buy side liquidity than the sell side. Then that means that if they go up, they're gonna get more money, right? So the house always try to see which one bet more. So at this moment, they see there's more people bet in the downside. That means the imbalance right there, right? If we're talking about the liquidity theory right here. So that means more sales buy side liquidity than sell side. What they're gonna do? They're gonna run up. They get all the people. They're gonna pay the people who go long, because less of them, right? Less people, let sell side liquidity than buy side, and they go here and they grab the buy side liquidity. They still make profit and keep go up, and the people go here. They have to exit their position. They have to liquidize their position. That means they have to buy back, and when they buy back, it really full this rally. That's why you see it's explosive move right there. And at a trader, at a day trading, our job is to identify this move and capitalize on this move. And today we couldn't capitalize. We're not there, I guess. So we're still learning. But it gives us some idea. Next time if we see this, we know how to capitalize them, right? We're learning every day to humble ourselves and so you see right here, the gap up, see, gap up, and let it fill. And then as soon as you feel right there, you put a buy stop right here. And when it go up, it will carry our trade into the rally, and we risk very little. That's the whole idea of low risk trade that we champion, right? We want to follow the sort of philosophy, but the trick is that you're gonna make a move right here, either move up or move down. You have to make. It's called another word that called critical state right there. Let's see if we see any critical state at this level. We see any. Yeah, you see right here, you see this gives you the PSAR gives you a signal that go long. Yeah, in this case, you don't want to wait because you will miss, right? In this case, they want you to go long. You have to wait, because if you go long, you get top out because it's still in a range. But when it's in a critical state, you better go long. That's the whole idea. Wow, beautiful right here. I think they have a pattern right here. Yeah. We're thinking about, yeah, but this candle should give us enough idea. After viewing the graph and it hit, one standard deviation, then, put a buy stop. Let's keep a symbol right there. We don't want to overanalyze it, so. But anyway, look, before we wrap up, let's look at the 4-hour time frame and we can see what's going on in the higher time frame. So we see that this level is we identify is very important. You see, somehow it go back and it glow above this level, 75.82 right there, very critical. And we see that, I don't know, it could be a 4 breakout right there. Right? We can put a sell stop right here. What you have to do, right? Let's see if that the trade idea, then what will be our risk reward. And we already know the high of that, right? The buy side right there. So we're gonna reach $2. And what our reasonable target gonna be this, right? So you get $2, right? You reach $2, almost $3. Yeah, 88. That dropped to it, and you get $8. So it's more than 1 to 2 risk reward ratio right there. That can be a good trade. Also, that's an idea right there. That's the trade idea, tradable idea right there. Okay, let's look at we want to look one more, and then we can wrap up. We run over 2 minutes. We try to keep at 30 minutes, but right now we are 32. We run over 2 minutes is okay. Let's wrap. We haven't looked at the weekly for a while. So what do we have here? Yeah, what am I just saying? It's 10. Yeah, weekly you don't need that. But anyway, okay. So for the month of January, you see that there is Dow close. Yeah. Well, it's basically the market still in the uptrend. We don't see any in the weekly. You don't see any market structure shift. So that's the market environment that we operate is still a bullish. It's still a bull market right there. Keep that in mind. So let's see how the market gonna react on the next 2 weeks that close the month of January. That give us a signal where the market gonna move in February and March right there. All right, I think we have a wonderful review for today. We are always grateful for your time and interest. We love what we're doing, and success is coming our way. Bye for now.